Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Sunday, June 7th, 2020. Hope you guys are having a fantastic weekend. And obviously, you can see I have my recording equipment back, so I'm able to do the video reports. And let's get started. So, this rally on Friday, it's really just simply remarkable how really the type of gap ups that we've been seeing. And right now, where we are, we have the S&P is still almost 200 points below the previous high, but we are at some of the most overbought levels really in history. I've never really seen these types of conditions that we're in right now, but we're also not really seeing the types of divergences in place. So what that's kind of suggesting, and I'll go over the overbought levels in a second, but really what it's suggesting is that we should get some kind of pullback. Most likely, I would say somewhere down into the 3090 area, or this support right around the 3070. And from there, probably have another push back up to test the highs. Now, the reason why I'm saying that is if we look on the 60-minute chart here, we don't have any bearish divergences, and also on we don't have any bearish divergences on the NIAD. So that's suggesting that we should get some kind of pullback, whether they pop up and come down and hold support, and then kind of churn around a little bit, and then probably come up and test or break the highs, and that should set up the bearish divergences that we're looking for, where a deeper drop can hit. Now, this could happen in a very short time period, so I'm not looking at something that's going to last 4 or 5 days for it to do it. But the thing is, we could have a quick move down and then a quick move up, and then that will start setting up the divergences. Now, the dates that Woody has been putting out, it's always been June 5th to June 8th. So we're in the time period right now where the bull friendly tape is going to be moving over to bear friendly, and that's going to be looking for a some the type of pullback that we're looking at, and it could go deeper than some people are anticipating. Now, the big move on Friday was based off of the jobs numbers. They've already come out and said those numbers are totally wrong. So all the excitement that happened on Friday was really for nothing. They were really just skewing the data on it as far as the people that left the workforce and stuff like that. And that's really how they came up with those numbers, because anybody, really with any brain would turn around and say there's no possible way that we just added 345,000 jobs during the week of May 10th to May 17th, because the whole entire economy was shut down. So there's no possible way that could have happened. So the BLS has already come out and said that those numbers are off, but it didn't really, the damage is done as far as what the markets did on it, because it just took it and rose 81 points. But again, it's 81 points on the data that was wrong. But in any case, so let's take a look at some of the charts that I'm talking about with the overbought conditions. Now, this is the Dow. You can see we're running right into some major resistance right now. Overall, it is lagging obviously it's lagging the NASDAQ because that made new all-time highs. But it's also lagging the S&P as well as the Russell 2000. So this is where your big money, international money and stuff comes into. So the fact that this is lagging as we have the NASDAQ and the Russell 2000 that are flying is telling us that it's we're going to come back to test some support levels sooner rather than later. But this is one of the charts that I'm talking about as far as is some of the most extreme overbought levels that I've seen really in history. This is your put call ratio. You can see the last times we made it up to these levels right here. You can see this line. We had a drop right here, and this is kind of what I'm anticipating could play out here, where we get a drop and then back up again, and then from there we get the deeper pullback that I think will bring us into some support around the that 2700 level. But here you can see this is these are the last peaks right here, and from there I think we had a 150 point drop in the S&P. So that fits this, but then we had a quick move up, and that gave us a divergence on the put call ratio. But this is one of the, like I said, we as far as being overbought, this is extreme overbought levels here. So if we take a look at the NIAD, you can see that there is no divergences. So this is what's given me the clue that we're going to come down, say test some support, and then from there come back up, where then we'll get the NIAD divergence. Now, some of the other charts that I want to show you as far as being extreme overbought levels, it's really this is the stocks above the 50-day moving average. We haven't really ever been up at these levels before, so it's right now everything is really built into this market, and everybody's really assuming that we're getting this V-shaped recovery when we haven't even, like I said, we haven't even started to see the ripple effect, because things are just starting to open right now. And the risk of all this is that you don't know what small businesses are going to be able to open to begin with, and then from there, who's going to be able to stay open when they're going to have the restrictions as far as how many people could be in their store or their restaurant. And from there, that's where we get the second phase of businesses going, just going under, which is going to keep the unemployment rate somewhere around that 17%. So the fact that we have stocks in the markets nearing highs when we're going to be at 16-17% unemployment for a very, very long time, it's just telling me the market is just way ahead of itself. So those are really the extra, let's say the overbought levels that I'm talking about. So if we get a pullback, the first really line in the sand that the bears are going to have to push through is this 31.30, and then down at the 30.76. So these would be some areas as far as support where we get a drop and then back up again. That would then set up the bearish divergences on the hourly chart, and then set up for the larger drop. Now, if we take a look at the S&P on a daily chart, you can see that we still have the bearish divergences in place. Here is your resistance right here, and this is where we touched. Now, this is the channel, that bear flag that I've been talking about, and just look how many gaps that we've had here, and it goes on and on. So this is a foundation made of toothpicks, and once it starts breaking, what happens is all these gaps just starts collapsing, and there's no support, and we see really something that this rally that started on March 23rd, that made it all the way up to the 30, almost the 3200 level. We can see this drop down to the 2850, or even down to that 2720 area in days. Even though this took 2-3 months to get here, we can see these gains wiped out in a couple days, especially when the data starts coming out with this isn't a V-shaped economy recovery that we're having. It's going to be an L-shaped, and right now we have a V-shaped recovery in the market. So eventually it's going to come back to a normal mean, and like I said, I'm thinking somewhere around that 2700 level. I'm still looking at this as just a large A. This is our B, and then we're going to get this wave C down, bearish divergences. But like I said, on the 60-minute chart, we don't have the divergences. So a pullback somewhere down into this 30.76 and then back up would make sense, because then that would give us the divergences as well as the divergence on the NIAD. So again, here's your just really the first support level, 31.30. This is your support zone, and that's coming through your 30.74 down to your 29.80. This is what the bears have to get through to see a move coming down to that 27.60. So let's see what plays out tomorrow. Like I said, as far as the bull-friendly time period that Woody's been showing, this has been the time period that he's been expecting a turn. I think that tomorrow morning, before the market opens and he gets his sentiment data, I'm pretty sure we're probably going to see 100% sentiment here. So everything's in line for a drop. It may get a little choppy before we see the more meaningful drop, and when that happens, I'm still expecting that we're going to get a move that's going to bring us somewhere, I think at a minimum down to the 27.20, but more likely down to the 26.40. So with that, enjoy the rest of your weekend, and I'll talk to you guys in the morning.